Well, howdy.
Hello. How are you today?
I'm doing great. Keith Pitch here with the Realty eXperts with my co-host,
Darcy Hardy with
Darcy.
eXp Realty, the Hardy Group.
Darcy Hardy. How are you?
Good. How are you today?
Good. It's a beautiful, rainy March 8th.
I'm ready for spring.
Yeah, spring can come around anytime. Maybe a little bit more snow up in the mountains. Get that snowpack. But we've got a packed show here today.
We
so
do.
Let's jump into it. If there's no snow, we'll just talk.
I'm super excited about that. And before we jump into Rate the Rates, I want to say we're going to be talking about the big D today.
Mm-hmm.
What's the big D?
Defense. Oh, wait. No, it's not football.
The other big D.
The other big D.
Divorce.
Yeah, divorce.
Right.
So
I want to make sure that if we have people out there that have questions about handling real estate with divorce, you give us a call.
Yeah.
The number to do that, and we'll go ahead and put it in the comments, but the number to do that is 206-557-9103. That's 206-557-9103. Okay, on to Rate the Rates.
Rate the Rates.
Yeah,
so here we go. Another beautiful month has passed, and the rates have gone up. They've gone up. So,
yeah, they have.
Let's talk about. We had the little black rain cloud that was inflation, and what that all meant, that rates were going to go up, and now we've kind of compounded it. So. Personally, and you know, I speak for myself. All my heart is in Ukraine now, with all the people there going through their struggles, and that the conflict there has actually kind of exacerbated things.
It definitely has, without a doubt.
It's with heavy heart and mind that, you know, rates are going to continue to move up, with now the new sanctions being put in place on Russia and oil leading the charge, as all of us have seen last week. The price at the pump has skyrocketed, just gone through the roof. So the rates are going to continue an upward trajectory. It's going to be very telling what the Federal Reserve does next week when they get together. March was their launch point. So we'll see how aggressive the Federal Reserve is as far as what rate movements they come up with next week. But I would say at this point, we're going to continue on an upward trend into the fours, low fours. And I think the 2022 ceiling is going to be somewhere around 4.5, 4.625. So is that a big number, right? I just want to contextualize this really quick. Right now, we've just returned to pre-pandemic levels. If we go back to February of 2019, before everything happened in the beginning of March of 2019, we were right there in the low fours, low to mid fours, depending on your total scenario. So look at the Freddie Mac mortgage survey. You can take a look at for yourself, and you're going to see that we're just right back to pre-pandemic levels as far as interest rates are concerned. So I think we're going to level out here. Hopefully in the next month, we will keep the wild card on reserve as far as how far we escalate in Eastern Europe, and see how the whole Ukraine war is going to shake out. So it will have an impact here locally, from a lending standpoint, from an interest rate environment standpoint. And you know, I think we'd be remiss if we don't talk about it here a little bit in Rate the Rates, how it will impact the listings and the buying side of things.
You know, we have talked for years about it being a global economy, and we've seen that more than ever during COVID, and we're seeing it so much more with this war than we have any other time. Yeah. Is it going to affect the market? Absolutely. The most place that it's going to affect it, where it's going to have the biggest effect, is without a doubt the rates. And when rates go up, usually it means a little bit more of coming out of that seller's market, going a little bit more towards a buyer's market. Certainly, I don't expect it to be a buyer's market anytime soon. But will it get a little bit more even, a little bit more balanced? Yeah, it should.
So instead of a dozen deals or 20 offers on one house, we'll get maybe a handful,
Yeah.
2, 3, 4.
Yeah. And we're starting to see that a little bit. It depends on the house. It really depends on the house. It
Gotcha.
depends on the property. It depends is always the answer in real estate. It really depends on the property. But that being said, yeah, I would expect it to be less multiple offers, and those that are jumping in the buying arena will actually have a bit of a chance sometime soon.
Yeah. So watch the rates for those of you that are looking to get into the market, get pre-approved, understand that the market does move. So there's really cool things out there. Like we just rolled out a lock and shop program.
Ooh.
So what that does is it allows you, the client, to come in today and say, hey, let's lock in that rate, right? I don't have a house picked out yet, but we can lock in that rate, and then we can move through the next 60 days to find a house. So you lock the rate, you shop for the next 60 days, and then you get under contract within that 60 days, and then that rate is locked in. Because if we look just back 60 days from today, we would be in the low 3s. So that would save you a whole point on interest rates. So
Absolutely.
It's definitely something to let us know how we can help you out there, and look for those types of products to help preserve against one of the highest fluctuating variables right now in the mortgage and real estate process, which is your interest rate. So yeah, there you have it. The rates going up.
Going up.
Yes.
And then
Ding.
up. And then
Stop that.
But remember, everybody, it's rough compared to last year or the year before, but
we were just super spoiled.
We were so
Let's be
spoiled.
honest. We were horribly spoiled to have historically low, like trough, the bottom of the barrel interest rate environment.
Absolutely.
Ever. One other thing to close out Rate the Rates.
Yeah.
This may not be a very popular topic, but look at adjustable rate mortgages, guys. Yeah, everybody does that because they remember the early 2000s leading up to the mortgage bubble. But what happened back then is very different than what's happening today. What happened back then, people that were no way, shape, or form qualified for a house were getting a house and being put into a house, and they couldn't qualify for it. That's not what's happening today. Trust me.
So what's happening today that adjustable rate mortgages?
So adjustable rate mortgages are still being underwritten to the full extent of income, assets, and credit, right?
Yeah.
So there's integrity in the underwrite. But I was just talking to a gentleman the other day. He's coming here. He's on a 3-year contract.
Oh.
So I was like, you should grab an adjustable rate mortgage.
Yep.
It's locked up for 7 years. That rate is not going to move for 7 years. FYI, the average American holds onto their mortgage for 6 to 8 years. They're either going to sell the house, they're going to refinance the house. That's as long as a mortgage is on the books for right now, average. So why I say this is the interest rate environment is substantially different than the fixed rate environment. When rates are really low, that 30-year fix made sense. Right now, there's a fairly sizable spread, especially in the jumbo market, that if you're in the jumbo market in King County, that's over $891,000, right? If you're in that market, you should definitely be looking at and comparing and contrasting a 30-year fixed with an adjustable rate mortgage.
Yeah, in the last few years that we've been spoiled, the adjustable rate hasn't even it hasn't been good.
No.
It's finally getting to a place where it's actually decent again, comparatively. So it needs to be the right product for you.
Yep, absolutely.
But it's a possibility.
But take a look. It never hurts to look, right? It's not your mortgage until you sign at the escrow company.
Yes, so true.
There you go.
All right, well, it looks like we have a call coming in.
Oh, do we? Awesome. Already?
We're
just flipping the page to talk about divorce. This is a really important topic. There's a lot of misinformation.
There is.
That happens on this one. So
I'm going to go ahead and answer this call. This is my first time doing this on this before.
Jay's giving us the thumbs up. How does that work?
Hi, this is Darcy Hardy. I can answer your divorce question for you. Hey, Jay, I can't really hear her.
Please hold.
I'm sorry, I can't really hear you. Technical difficulties. Okay, so it looks like we're going to
Oh,
have
we're going to
Jay
hand
take
over
my
the phone
phone.
to our technical director.
Yes, my technical director.
Nice. So, divorce, as I was saying before we had
Yeah.
can we hear?
Caller?
Hello?
Oh, there we go.
you are.
Hello?
I'm sorry
Caller.
about that.
Thank you.
Did you have
so
it on
my
your
question,
AirPods, Darcy?
No.
Oh, okay. Caller, who are we speaking with?
hi, I'd rather not say.
Okay, fair enough.
But my question is, so I've been a stay-at-home mom for over a decade, and we bought the house with my husband's income and the loans in his name. But we're getting divorced, and I want to know how I can hold on to my house or a piece of it throughout all of this. Or is this really just his house because his name's on it?
Okay, so first of all, great question, because we hear this come up a lot. I want to clarify that you are in Washington State. Is that correct?
Yes.
Okay, so that's important because the rules change from state to state.
Mm-hmm.
So, next question. Did you buy the house before you got married or after you got married?
After.
Okay. If you bought the house after you got married, and I can't say anything for certain because I'm not an attorney, I'm not a judge, anything like that. However, Washington State is a community property state. Okay. This means that they try to do 50-50 wherever they can. And if a property was bought by a married couple and when you bought it, nobody agreed that it was only the other person's, it doesn't matter whose funds were used to purchase it, it's going to probably be split 50-50. Okay. That doesn't necessarily help you keep the house, but you know that he's not just going to get it and you're out. Right? Yeah. Okay. So as far as what happens next is dependent on what the house is, whether you can afford to keep it yourself or do some sort of other agreement where you get to hang on to the house. Does this make sense?
It does. Thank you so much.
Absolutely. Thank you for calling. I really appreciate it. And good luck in your divorce.
Thank you. Bye.
Bye-bye.
Thank you. Yeah, that's a tough one that
comes up.
Comes up all the time.
Yeah.
And so with regard to the mortgage and who gets the house and all that stuff, that's predicated and negotiated by the two parties, right? Who gets the house, but so often we get the mortgage calls like, hey, can I afford to stay here?
We have another call.
Cool.
Fantastic. Hi, this is Darcy and Keith. Do you have a question for us about divorce?
In the air?
There you go.
There
you
you
are
go.
on the air. Who are we speaking with?
Oh, hi. My name is Sam.
Hey, Sam. I'm sorry you're going through a divorce. If it's what you want, I hope it's awesome. But
I think it's better for everyone, really.
Yeah, often the case. But what can we help you with today?
Well, my wife and I, we are already separated. We're definitely on our way to divorce, but I really need to get into a different home or condo. This place just feels really, like our old life. Can I do that? Or do I have to wait until the divorce, is final? Because there's all these dates and it's just like, I just need to move.
Yeah.
Yeah, that's a really tough one. Keith, do you want to talk about that a little bit?
Have you guys filed a formal separation agreement?
Yeah, we are formally separated.
Okay. And with so the question about can I buy a new house? The answer is, and Darcy, you said it earlier, it depends.
It depends.
Right? I hate giving that answer because it keeps you kind of there in limbo. The number one situation behind buying a new house is, can you qualify for both payments? Yeah. Right? So when we look at the mortgage side of things, we understand that you're going through a separation and what will culminate into a divorce. And so many people, because typically there's one party that's going to be displaced. They're out of the house altogether, so they want to go buy another house. If we haven't had a formal divorce decree that's been signed by the judge, we still have to look at that in debt to income ratio qualifications. So the question would be, could you afford both houses? And does your income support that? If your income does support that, you totally could make that transition out. Yeah. The nice thing that helps clean up the transaction once the divorce is finalized, if the departing residence was awarded to the ex, then guess what? We get to take that mortgage payment off your debt to income ratio. So that's where there's another layer. Divorce is helpful once we have that final divorce decree in hand and all that good stuff that goes along with that. But the separation of legacy debt between the two of you is still in play until we get that final divorce decree.
Yeah, and I'm going to add to that. There are times that the escrow team might actually want the future ex-spouse to sign something saying that they have no right to this place that you're purchasing.
That is, yes.
And that can be a really big thing because sometimes divorces are not so amicable.
Right.
So that needs to get weighed into your decision on doing this or not if you think your future former spouse will sign something being like, yep, she bought this with her own money. We're going to go ahead and let this just be Sam's.
So this roadblock is super, super important, Sam, because what happens all the time, this happens a lot more than people understand, is to Darcy's point, we are a community property state here in Washington. So if there is a marital asset that is brought into the union while it's still being viewed by the state, right? Now you have to get that soon-to-be ex to sign what's called a quitclaim deed and release all interest of the property to you while you guys are still married. That's where it kind of gets sticky. And unfortunately, there's a lot of folks that go out there and start this process. That's the first question that if you were to come to me and say, hey, Keith, I want to buy a new house. I'm currently separated. I have a legal separation in place and we're going through the process of divorce. The first question that I always ask folks that come to me in this position is your ex willing to sign a quitclaim deed? If they're not, they're going to have to go on title and they're going to have to, and then that asset now becomes part of the divorce proceedings. Right. And it makes a more muddied water.
Absolutely.
Yeah. So that's it's not insurmountable. We just have to make sure that everybody's willing to sign on the dotted line.
Yeah. Okay. I see. Well, it sounds like I have some thinking to do. Thank you for your help.
Yeah. And once the divorce is final, then it's a completely different ballgame depending on how the assets fall out and the credit liabilities get distributed.
Absolutely. And feel free to give a call to either one of us offline if you'd like to take this conversation further. Good luck, Sam.
Thanks for the call.
Thank you.
Thanks.
Yeah, it's interesting. I didn't realize the divorce rate in Washington was such that there's somewhere between 24,000 and 25,000 divorces filed every year. And I was like, wow.
That's a lot.
That's a lot of divorces filed.
That is a lot of divorces filed.
Yeah, I was looking at the state's website. It's like every 12 minutes a divorce is filed. Wow. So when did we start? So there's been two divorces filed. Since we started this podcast, which is kind of crazy.
You need a realtor.
But yeah, but all joking aside, one thing that I've found very common amongst folks that are going through divorce or recently divorced is there's uncertainty in that transition and they're questioning what they can do. And that, I don't want to say it may be embarrassment. Don't be embarrassed to consult a professional. Come to us, ask your questions. It's better to know what you can do than have no clue what you can do.
Absolutely. And on that topic, we know a decent amount of times before the spouse knows that they might be getting a divorce. Because people do ask these questions to help inform their decision on whether or not they can afford a divorce.
That financially from a living situation, financially from like who's taking debts and all that good stuff, that there's a lot to work through there. So ask those questions. I've never gone through divorce, knock on wood. I'll never get there. It's a new situation that you're finding yourself in. Yeah. And in every new situation, from when we started to walk or when we started to go to school, right? Ask those questions. It just empowers you to make those well-informed decisions.
We got another call coming in.
Oh, awesome.
It's a popular topic. Hi, this is Darcy and Keith. Who am I speaking with?
Oh, hold on.
Hold on one second. Let me make sure.
We have to have the phone settings right.
Yeah, phone settings. Okay, can you hear us now?
Hello?
Oh, there we go.
Okay, who are we speaking with?
Hi, this is John.
Hey, John, thank you so much for your call. How can we help you today?
Yeah, so I purchased a house before I got married. Now my wife has moved in with me, and we're going to be getting divorced here. Just curious what rights my wife has to my house.
That's a great question. How long have you been married?
We've been married for 2 years.
Okay. So now I mentioned before that Washington is a community property state. Okay. Anything that's purchased after the marriage becomes marital property and is usually split 50-50. In your case, you purchased the house before you were married, correct?
Correct. Yep.
Okay. So odds are you are going to be more favorable in keeping the house. However, if you have commingled funds and if your wife has paid some towards the house, such as towards the mortgage, updating things in the home, if she has really helped in keeping it a great asset, the usual circumstance is she gets a portion of it. I know this is confusing, and what it takes is either, depending on which type of divorce you decide to go through, whether you do mediation or collaborative or go to court, you have the conversation and try to figure out what seems to be fair. Ultimately, a judge will have to, for lack of better terms, bless whatever the decision is that's being made. Does that make sense?
Yeah, appreciate that.
Absolutely. I wish you the best moving forward, and I think documenting who paid for what on the house is going to help you moving forward.
Great. Thank you, guys.
Thank you, John.
Yeah, absolutely. That's a great question. Yep. So, you get into splitting hairs a little bit there with, I had it before we got married, but especially given the past 2 years where things have exponentially gone through the roof as far as values are, wow, we did that together. Yeah. As far as values are concerned, it could get into some very interesting conversations between, I had this before, but in this last 2 years, we were paying it out of our joint account.
Yeah, then it's muddied water.
Yeah.
And frankly, it's either down to you to decide together what you think is right and then have a judge approve it.
Yeah.
Or if you can't decide, that judge will make a decision.
The decision for you.
Hey, we've got another call.
Boy, howdy.
Awesome.
Wow.
Hi, this is Darcy and Keith. Do you have a divorce question for us today?
Hold on one second.
There we go. We got you on the right one. There you are.
Yay, we hear you.
Oh, there I am. So I am going to be getting divorced. Well, we are going to be getting divorced.
You can't do it yourself.
Huh?
It takes two.
Yeah, it does. I was just wondering what we need to consider when making the decision to either keep or sell the home.
This is a really great question that I think a lot of people don't realize how hard a decision this is and how many things go into this decision until you're in your position. So the first question is always, does anybody want to keep the house? Right?
I do.
You do. Good. Okay, so now if you want to keep the house, the question becomes, can you afford to keep the house? And what that looks like is you'll need to have a conversation with a lender in order to figure out financially what makes sense. Now, Keith, how far do they normally have to be in the process in order to decide whether that makes sense or not?
Immediately, right? If you're going through the process where finances are going to change and you know that it's coming down the pipe, right? The divorce is imminent, right? Get your financial ducks in a row immediately, right? I see all too often that what happens is typically in divorce proceedings, if one party, very common in divorce proceedings, if one party is awarded the house, then they have X amount of time to refinance the house into their name. And if the marital debt, the mortgage was in both their names, to get it out of the ex-spouse's name and all that good stuff. So they have X amount of time to do that. You could get all your financial ducks in a row with regard to the mortgage and refinancing and making sure that's actually feasible before the divorce goes through and is finalized. So we could wait till the divorce finalizes and then finish the mortgage process, right? So don't wait until after the mortgage is stamped to figure out if you can afford the house or not. Get in front of that as soon as possible. A couple key reasons why is a lot of folks are depending on alimony, child support, and other spousal maintenance to qualify for the houses sometimes. If you're a stay-at-home parent and you're getting the child support and alimony, then all of a sudden, a lot of folks don't realize you have to have a track record of receiving that for 6 months prior to being able to use that on a mortgage application is the standard underwriting practice on that. So if you're right out the gate and you need to get that house refinanced and you're trying to use that spousal or child support income to qualify, you can't use it yet. So you could find yourself handcuffed or worst case scenario, depending on how the divorce decree is written up, you may be forced to sell down the road and put yourself in a position where you just weren't financially able to do it. It's a big shock to the system, both for family and kids and all that stuff. So if you know during the process that it's not feasible, then you can change how the outcome is going to look in the divorce decree. If you know that the process is feasible, you can vie for your position that you want to keep the house, and that's all going to financially line up. So it's really important to not wait on those. So many people do. It's important to get your financial ducks in a row right when you know it happens. And that's kind of alluding back to what Darcy was saying. We have people that do call us and say, hey, thank you for helping us buy the house 2 years ago. And, we're deciding to go in different ways. And these are repeat clients coming back to us and say, hey, would I be able to afford the mortgage by myself? So we can run those numbers. We're happy to run those numbers. And definitely you should empower yourself to run those numbers before you make those final decisions.
Now, I have a question for you, caller.
Yes.
Are there kids involved? Not the furry types.
Yes.
Okay, perfect.
No fur children, but yes.
Okay, so when children are involved, I'm not sure if you've heard this term yet or not. It's called nesting. And sometimes what's happening is people are making the decision to have the family house remain the family house that the kids stay at. And one parent stays with the kids for part of the week, and the other parent comes and stays with the kids for another part of the week, and you still have co-ownership in the house.
I hadn't thought of that. That's
right?
a great idea. Okay.
Yeah, it's a little bit different. I don't know well, I don't plan on getting divorced, but I don't know that I could go down that road, but it is a trend that we're seeing happen right now. So there's many things to think about. How, if you have a great relationship, can you still do that for the kids? Is it better for your family to remain a family and just no longer be a couple? Or to be in different places? And unfortunately, the financials oftentimes guide a lot of that decision.
Yeah.
So hopefully we've given you a little bit to think about.
You have. Thank you. I appreciate it.
Thank you so much.
Bye-bye.
Yeah, the financial aspect of that is it's math, and the math doesn't change much. But I want to go back to that misperception that people think, well, once the divorce decree is finalized, I can just use that alimony, I can use that child support immediately. And it's just not the case. And we find people getting pushed up against 6 months down the road, and then there's pressure from the other spouse to like, hey, you said you were going to refinance this, you haven't, and you haven't been able to qualify yet because you're still waiting for that to come through, because we do need to see that 6-month track record.
Right. And people need to realize that while we talk about this as far as divorce is concerned, divorce isn't always how it happens. Sometimes there's palimony. If you've been together for an extended period of time, there's a lot of people that don't get married and do live together for an extended period of time, buy houses together, sometimes start families together. They can go through something that's very, very similar.
Yeah, absolutely.
So it's not just for those people that are married. You got some stats there,
I got
right?
some stats. You want to hear a couple stats?
Absolutely.
You are less likely to get divorced if you have had happily married parents.
Interesting.
Yeah.
I got another call coming in.
Oh, wow.
Let's see if this person has happily married
We'll
parents.
stop on the stats. Yes.
Hi, caller. This is Darcy and Keith. Can we answer a divorce question for you today?
Hi. So my wife and I bought the house of my dreams about 10 years ago, and we're getting a divorce, and she wants to sell the house, but I want to keep it. Do we have to sell it?
This is a great question. So there's a lot of it depends involved, like we've said before, but did you buy it when you were already married?
Yes.
Okay.
We sure did.
So if you bought it when you were already married, technically in Washington State, being a community property state, this is considered a state where we're going to do 50-50. However, a judge can at times dictate that somebody gets the house or somebody has to sell the house. I actually saw this last week. A judge decreed that it had to be on the market by a certain date in March, and one of them did want to keep it. Now, I'm not saying that to scare you, because that is a very rare situation. What this is probably going to come down to is whether financially you'll be able to handle the house yourself without the help of your spouse, and still be able to handle any other responsibilities that you have. Keith, this is something that you happen to come across a lot with refinancing.
Yeah,
correct?
there's a lot of refinances driven for this purpose. One thing that kind of gets overlooked is the equity position in the house, right? So, since you guys bought this as marital asset, typically when we go to refinance an X off of the title, they want their portion of the equity out of the house. So a lot of folks say, oh, well, hey, my mortgage right now is $300,000 and I can take care of that payment, no problem. But they don't calculate the extra $300,000 of equity that they have to pull out and pay off the ex-spouse. So, don't just think about the mortgage as it stands now. You have to think about, well, what is the settlement going to look like? How much of the equity is going to be awarded to the ex-spouse? And can I support that mortgage is the real question.
Absolutely. And that becomes tough.
It can be, especially with, again, the last 2 years worth of appreciation that we've had in and around the Sound, that we're appreciating at 20 to 23% annually. That can be a big number. So it goes back down to your qualifications as far as income to be able to service the new higher debt load on the house. Otherwise, you would be in a position that you need to liquidate it to award the other party their equity position in the house.
I hope that answers your question.
It sure does. Thank you so much. This is great information.
Thank you so much. You have a great day.
Yeah, that's a hard one.
You too.
Oh, yeah. Thank you.
Thank you.
Yeah, that's a hard one because a lot of these couples get married and they go out and they buy a house and they qualified for that house with both incomes.
They do.
And then all of a sudden there's an equity position that needs to be cashed out. And now one of the two is trying to qualify for that house solo. Right?
I actually see on the feed here that we have a question coming in. So it says, a friend purchased rental properties, homes with their significant other. Okay. They're going down this road currently. Okay. What options do they have with their rental properties? So if you have maybe a family home and some rental properties.
Boy.
Yeah.
That gets sticky fast.
It gets sticky. So there's several different ways to handle it. And a lot of it is what your intentions are. Mm-hmm. There's several different types of divorce there that are possible. And if you're doing a collaborative divorce where everybody gets together and tries to work things out, fantastic. If you're doing a mediated divorce where there's an independent party helping you walk through it, that will help, or arbitration.
Yep.
But sometimes these get down to litigation. And when they get down to litigation, oftentimes they're getting pretty nasty. Mm-hmm. So my best advice on this to your friend is to really decide what they want and what they think is fair. Take the emotions out of it and look at it as if you're dividing up a business 50-50, because that's ultimately what this is. Okay. Now, depending on how many rental properties there are, one might have to divest some of the ones that they're awarded in order to be able to carry the mortgage on other ones that they're awarded. So some decisions will probably have to be made. What are your thoughts, Keith?
Yeah, it's a very dynamic one.
It is.
Most divorce transactions that I've done have just been singular house, right? When you get into a position where you and your soon-to-be ex have bought multiple properties, it gets sticky fast because there's a lot there. There's income built. There is asset built. So to Darcy's point, I don't want it to sound trite or anything, but really getting the emotion out of it as soon as possible is what's going to have the best outcome that I've seen when working with my clients that are going through a divorce or just recently divorced. They're like, hey, it reminds me, I don't remember which lawyer it was or law firm it was. It's like, hey, we do divorces for grownups, right? People that are like, hey, we're just not getting along. This relationship isn't working. So let's find a solution that works for everybody. There are those out there, so long as we don't get too imbibed with the emotion.
Yeah.
So, long story short, we're going to go off what's on that divorce decree and how the assets get parsed out, and then we can underwrite based off of that. And again, before you get that final divorce decree, make sure that the mortgage side of the thing, the qualification side of the coin, is able to be addressed.
Well, I got another call coming in here.
Oh, sweet. Wow, I didn't realize this was going
to be Hi, this is Darcy and Keith. Who are we speaking with today?
Yes, you are speaking with Kayla.
Hello, thank you so much for calling in. Do you have a question for us about divorce?
Yes, I do. So, I inherited a home from my grandmother about a couple years ago, but I was married during the time when I inherited it.
Okay.
However, unfortunately, we are in the talks of separating and divorcing. And it's been our family home for about the past 5 years.
Great.
Tell me what this means for my divorce. Does he get half? How does this work?
Can I just get, so you inherited the house, you guys moved into the house, and that's been your family house for the last 5 years? Did I hear that right? Okay.
Yes.
Yeah, so this is a great question. Traditionally in Washington State, and again, this is a very Washington State specific thing, because we are a community property state, things are often split 50-50 once they're received after marriage. However, there are a few exceptions to that. And inheritance tends to be one of those exceptions. Now, that doesn't mean that you get it scot-free, free and clear, and the other person has no rights to it whatsoever. It means that the fact that you're the one that inherited it and not both of you together is going to get weighed more heavily. Now, that you've lived there for the last 5 years, if only you has been paying the bills and only you has kept up with the property, the assumption could be made that you would probably get it outright and it wouldn't be considered part of the marital assets. However, if your partner has been paying towards it over the last 5 years, there might need to be some sort of equity exchange in that case.
Yeah, I agree with you.
Does that make sense?
Yep, makes sense.
So inheritance is one of those. Gifts is another one. So if a family member gifted somebody a whole bunch of money or
here's $50,000. Yeah.
Did grandma do that?
No, I wish grandma did that.
Yeah, right. That's another one though. Or the last one, major one that we see is I guess there's two more. If you have a prenup or a postnup,
yep, that
has agreement, you both agreed upon what you were going to do if you got a divorce. And the other one is in the event you purchase something and the other individual signed off saying, yes, I understand that she's purchasing this on her own for herself. I have no rights to it. So hopefully that helps answer some questions.
Yeah. Thank you. I appreciate it.
Yeah, thank you. Hope all works out.
Yeah.
Yeah.
Okay, go back to those stats because I want to hear what those are.
How many states have community property? Washington is kind of crazy in this. How many states are community property states?
I think I know the answer.
8?
I thought that's what it was.
You're one shy. There's 9.
There's 9?
Yeah, there's 9.
I was wrong.
So we are unique in our process of working.
Oh, I forgot us.
Divorce. I got the other 8. I forgot about Washington. I'm right here. So we are unique in that state. In that case, I'm also licensed in Montana. Like, you bring all your stuff to the judge in Montana, and the judge says, "You get this, you get that. Boom, done. It's over with." So
yeah,
know that starting the process, it doesn't just involve the lawyers and whoever's going to represent you. It involves the other aspects, financial planners, real estate, and mortgage in your life.
It's a team.
It is a team, and it's a process that you need to rely on that team more than any other time. Mm-hmm. I think divorce is actually above acquiring a house as far as needing those trusted professionals on your side to make sure that you're putting into a plan of action through this divorce decree on things that are going to have to execute in the future, right? Whether that's refinancing the house, selling the house, or what have you. So cross your T's, dot those I's, make sure what you're setting yourself up for is attainable, and things will go that much better.
And to that point, you need to make sure that the professionals that you hire are truly experts in the field.
Yes.
I would highly recommend you go off, if you really like, your attorney, take their recommendation on who they suggest you go to. I heard of a case recently where this couple, they moved here from out of the country. He was working. She was not. She was taking care of the family. They decided to get a divorce. They had bought a house together, and they got some bad advice from a professional. And the bad advice actually got her deported. So you need to be really careful about who you're hiring to do things.
Yeah.
So don't just take our word for it. Again, neither one of us is an attorney. We're just going off of what our experience has been. But you need a solid team behind you.
Yeah, there's lots of resources out there, and don't ever hesitate to ask for help.
Yeah.
I think there's an element of that out there that, oh my gosh, ask for help. We're here to help.
Yep.
Couple other quick, cool things that, you're less likely to get divorced if you have a college degree.
Check.
I did not know that.
What if you have more than one college degree?
Now you're just flexing, Darcy. Come on. Easy.
I'm just curious.
Easy. Okay. I do like, you're less likely to get divorced if you watch romantic movies with your spouse. I think, what is it, Owen Wilson and J-Lo just dropped a new rom-com. So you're more likely to get divorced if you marry before 25.
If you marry before 20, you're
Before
young.
25, you're more likely to get divorced.
That's interesting.
And you are more likely to get divorced if you have a friend currently going through divorce.
Yeah.
So
Grass is always greener.
Grass is always greener, and
So actually, in prep for this show, I was looking up some stats about divorce in Washington State, and everything kind of stopped in 2019, like the rest of the world.
So, asterisk.
Right. So up to 2019, the divorce rate looked like it was slowly going.
It was
down.
It was declining in Washington State over the past decade. It was declining.
Right.
It ticked below 50%.
That's amazing.
It ticked below 50%. Now,
Dun,
as you
dun.
pointed out, we'll see how COVID and the last 2 years line up for the divorce proceedings, but we'll see. I mean, it is hard to file for your divorce when the court is not open.
So true.
So
true. We have a myth to bust.
We have a myth to bust, and I think this is a great myth to bust because this brings us full circle in preparing. So let's grab our goggles really quick.
Goggles.
And talk about myth busting.
Mythbuster.
Got our headphones on, so I'm gonna do this again like this and like that. Oh yeah, perfect.
Oh,
Looking
yeah.
good. Okay.
I'm ready.
So myth busting.
Safety first.
Myth busting is that the divorce decree is this magical document that say you and I were married, Darcy, and we got a divorce, and you got awarded the house, or I got awarded the house, and the mortgage is in both of our names. That this magical divorce decree says Keith gets the house, and all is well.
I have no rights to the house anymore.
No rights to the
his.
house. It's mine. You don't have to worry about the mortgage payments. You're fine with that.
I didn't want
right?
that house anyways.
Right. So the myth that we want to bust right now is that when one party gets the mortgage, it has zero impact on the other party's credit score.
Wait a minute. So you get awarded the house.
I get the house, and I have to take over the mortgage.
And
so
it's going to affect my credit score?
Yep. Well, that's the myth. Is it? Is it going to affect your credit score?
You tell me. No, actually, I do know the answer, but.
Yes, it will absolutely affect your credit score. So what happens, guys, is when a judicial assignment of debt happens, right? In this case, in this illustration, I'm responsible for the mortgage. If I lose my job and I miss a couple mortgage payments, it's going to show up on my ex's credit report because that trade line is still in force. You're still technically responsible to the creditor, though judicially you're not responsible for it. So when he gets awarded the house, I want to make sure it's also in writing that he legally has to refinance the house in his name. This is our best practice. Absolutely.
Because I don't want my credit score to be affected by him doing anything negative.
Right. And so it's very interesting to me. In the mortgage underwrite, if I was awarded the house and Darcy goes to apply for a new house, we're not going to hit her debt to income ratio with this mortgage that was assigned to me, right? It's debt assigned to others. I can exclude it from her qualifications. So she could go out and buy another house.
No problem.
However, if I just say, well, I'm super mad at Darcy, I'm going to screw up her life and go to foreclosure on my house, and now she has to deal with a foreclosure on her record for the next 7 years, that's going to hurt her severely. Right?
And we've seen this happen.
It happens too often. So, coming down to the brass tacks, I would always say if there was a joint debt taken out for a mortgage, make sure that joint debt is resolved through the divorce decree.
Absolutely.
Whether it's a force of a sale
Yep.
or a force of a refinance, and in the case the refinance cannot be accomplished due to lack of ability to qualify, the house gets liquidated. That would be my advice from a mortgage guy looking from the outside in. That would be what I heavily advise anybody and everybody going through a divorce with a joint debt.
Now, I recently heard of another circumstance where somebody was told, hey, you got to do this. And they went to a loan officer and said, hey, we want to refi because we're getting divorced.
Mm-hmm.
And the loan officer said, oh, well, you're going to lose that amazing rate. Why don't we just do a modification?
What?
Yeah, if they refied, they were going to lose the credit, the rate. They had like a 2.5, and they wanted to do a loan modification. What's your thoughts on that?
That's an interesting way to solve that problem, actually. That is not a widely accepted option for a lot of folks. So I just want to put that out there. Typically, the loan, once securitized and sold into the mortgage-backed security market, it's down the road, and a modification of that ilk. Whenever you go through a loan modification, they're going to say, hey, why are you getting a loan modification? And they're going to say, well, I got divorced. And then the typical servicer will say, well, go make a new application and see if you qualify by yourself.
Yeah, because you can't, a modification won't get the other person's name off of it.
Yes, a
will it?
Modification absolutely would get the other person off.
Okay.
However, that's servicer specific.
Okay.
Right. So you will see this, you very much could see this in the case of a regional credit union or a regional bank. You will not see this play out at a big bank. You will not see this play out at most non-depository mortgage lenders. And that's why I paused for a second. I'm like, yeah, that's a really curious way. Servicer specific. I would say that could be a feasibility possibility for maybe 5% of all loans out there.
And I think this type of detail shows you how many different suggestions and ways and you can accomplish things, but make sure no matter what, you're getting the other person's name off of it.
Yep.
Because if the other person's name is attached to it at all, it's not going to have any effect.
That is absolutely correct. Okay. Absolutely correct. So
that's our Mythbuster for today.
There you have it. There you have it.
Whew.
So we're quickly coming up on our 3 o'clock threshold.
We are.
I think we're there already, actually.
Probably.
If my little phone is correct.
Probably.
I think what I would say in closing today, guys, is divorce is happening. It happens. And the best thing that you can do for yourself, for everybody in that transaction, family, friends, your significant others, is prepare yourself and ask those questions. Understand what options are available. So when the time is right, the divorce is finalized, that you can put into play your plan going forward. What does that look like? And it's never too early to ask questions. It can be the case that it's too late to ask questions and you're forced into maybe a scenario that wasn't what you really wanted. So if I could say anything about today's topic with divorce, ask the questions early, ask the questions often, and have no fear in asking those questions, because we're here to help you out through what is a really trying time.
Absolutely. And thank you so much to our callers who called in and asked those difficult questions, because I 100% believe that you're helping other people feel more comfortable in asking the questions they need to get answered. So thank you. Let's see. Next time, we will see you in a month.
April
2nd Tuesday of April at 2 o'clock. And next time, I believe we're going to be talking some about inspections.
Inspect what you expect is what they say. So just a quick reminder, I was told this week is spring forward. Is it really daylight savings time this week?
Okay.
Someone told me that. So hopefully I'm right in giving you that same information. But yeah, Sunday we should be jumping forward again. So spring forward.
Yeah, so spring forward, and reach out to us if you have any questions. Please comment, like, share the podcast. We're really excited to be able to help as many people as we can here in the state of Washington.
Absolutely.
Have a
good
great
one.
day.